morning, this is Pat Walker, Mission Winners, doing a video overview of the ETFs. Doing this for everybody. Why do we look at the ETFs? It's not a case where we like to look at a bunch of charts. We have a limited amount of time and we want to use it wisely. By looking at the ETFs, we have a much better foundation of where there is strength or weakness of an industry group. And this is a fact. Leading groups produce leading stocks, and leading stocks produce leading groups. So we strive to find where there's strength, areas to maybe look into deeper with stocks, but also areas to avoid. And that's powerful. So here we go. Here's a ticker symbol here, and you can see in the upper left-hand corner, robotics, artificial intelligence. It's in a downtrend. There's nothing to do with it. I'd be careful with that group. Cloud computing, no power there. It's losing the 200-day. There's no power there. Be careful with cloud computing. Dow Jones Industrial Average is lagging. Be careful with the Dow stocks. Be careful with the market. Dow Jones Internet, almost hitting new lows. It's below the falling 50-day. Be careful. Now I need to pause here and share something. Please don't think I'm negative. No, I'm always optimistic, but I'm always a realist too. And I hope that you are too. We simply get in line with what is. Great quote, Dave Landry, I'll believe in what I see and not in what I believe. Let price and volume guide you. This is not good right here, so you just avoid that group. That's good to know. It's good to know what to potentially buy, and it's good to know what to avoid. Both things help us. IBD 50, this is a good proxy. The IBD 50 is a great list, but you can see it's really underperforming here. We took out the lows from a couple weeks ago. There's no power. We look at all this, and this is why we really haven't been doing any buying. It's not because, oh, we're negative and we're not going to do anything. It's just being realistic. If it's not there, it's not there. That's profound, isn't it? Here we go. The things I used to say at the IBD meetup all the time for years, like 12 years, if you have to look for it, it's probably not there. This one focuses on the MAXLIST stocks, as you can see in the note, and it's took out the lows from a couple weeks ago. No strength at this point in time. China, no strength. Gold is kind of hanging in here, but even it tailed back on Friday on a pickup in volume. But you can see there's some tops there. That doesn't look too bad on GDX. If it starts to take out the tops of these bars with volume. But note, the market can pull everything down with it, all right? Even defensive stocks, and defensive groups, things to be aware. Now gold, look at that, that lifted off a little bit too, okay? So there's two things with a little strength. I'm not saying buy it, but a couple things with that are stronger. And notice, gold related, defensive related, all right? Good to remember. Biotechnology, it fell below the 200-day, then rallied back up to the falling 200-day, and that's it. It's been telling us for a long time, just avoid biotechnology stocks, and we have. It's that simple. It's great, again, to know what to look for and areas to avoid. Oil and gas started to lift up a little bit, as you can see, pulled back, and this is related to the Middle East turmoil. Maybe this will form a high handle and lift off, but this will be very news dependent, okay? If there's peace over there, and I hope there is, this will probably pull back some. So we'll just see what happens. Technology, look what this did. Software, tells you to be careful with software stocks. Medicine, they need drugs, don't they? Look at that, there's nothing there with medicine. Mid-cap, lagging, not a lot of power and serious selling volume coming into this, as you can see. Down here, aerospace and defense, this lifted off with the Middle East situation, and it's even pulling back a little bit, okay? This one is also very news dependent, just for what it's worth. Home construction, oh, this was a great run for us. I mean, a great run. Look at that. That was a monster run. And now, how things change. And we don't argue with it. And that's why, back in here, we got out of the last of the home building stocks and locked in profits. We're out? Fine. We can rest. Growth, S&P 500 growth dropping, not a lot of power there. Small cap, hitting new lows for the move, no power there. Real estate, no real power there, be cautious with that. Transportations, no real power there, be cautious with that. Airlines, grounded, okay, that's dad humor. I had to do it. Even, there you go, you can see that. Just stay away from it. And it's been telling you for months, don't buy airline stocks. That's great to know. It helps us. Systematized. Regional banks, no leadership there. Mid-cap, lagging. Oil services, related to, things going on. Perhaps it'll take out these tops, but it even fell on Friday on a pickup in volume. All right? So you got to be cautious there. Excuse me. Continue onwards. Pharmaceuticals, they need drugs. That's my dad humor for the day. How about that? QLD, the one saving grace about QLD is it has a higher low. All right, this low is higher than this low or this low. What's the negative? It's below the falling 50-day, and it fell on heavy volume. Heavy volume. But I need to share something with you. So far, this is forming a nice higher low. This low is higher than these lows. That could eventually, coming to the end of the year, this could help lead to a great rally. The higher low setup is a powerful setup. You think not? The higher low setups here, and that's a good run. That's what we look for. So we've got to watch it and see on QLD, but that's ugly. QQQ, ugly. Be careful. NASDAQ 100. Retail, no leadership. Be careful with that. Silver, more of a defensive play, right? We pointed out gold, and these are, again, kind of like safe plays, right? Defensive, gold and silver. When things get squirrely, people are, I'm going to buy gold and put it in the basement. Here we go. I'm not suggesting you do that, okay, but just you can see this is starting to pick up a little bit on volume. There we go. Steel, nothing. Semiconductors. Oh, you can always look at the name up the upper left-hand corner. Semiconductors, there's nothing there. Be careful with semiconductors. Spiders, about to take out the lows from here, all right? And note the selling volume. This rallied up, and then there was a tail bar here, and then it started to drop. And I was telling the VIPs, I'd be careful buying here. I would say it, I would type it. I'd be a little careful here. And there you go. Not much to do with it. And we weren't buying. SSO, same situation. Solar, nothing. Small cap, nothing. Uranium. Now, uranium's hanging in. You can see right there. And here's what's interesting about this. I just showed you probably 25, 30 ETFs that they're all dropping. This one is basing, and it lifted up on heavy volume, all right, on Thursday, and based on less volume, pulled back on less volume on Friday. Perhaps if this takes out these tops here, that could be a potential buy. Uranium, but go smaller. And again, news will move these stocks up and or down, all right? Just share that with you. Oil related, you can see that one's hanging in too. Notice the theme here, defensive and energy related to the Middle East. Consumer discretionary, boy, the consumer's not buying. There we go. That's good to know. What does that tell you? Be careful buying consumer stocks. All right. Aerospace and defense, this lifted off, okay, with the news, and even it's pulling back. And there was heavy selling on this bar. By the way, if positive news comes out of the Middle East, this will most likely drop. Okay? So I'm not saying it's going to have, the news will come. I hope it does, but these are just things that we look for. Connecting the dots. Biotechnology, nothing. Home builders, nothing. I mean, look at this. Nothing to do with them. Materials, how do you build homes with materials? Home building is falling, materials falling. That's connecting the dots. And it's not calculus, it's pretty easy. It's not even algebra. Communications, it's pretty sloppy. And note the green bars and the red bars, price and volume. Ooh, oh, it's going up. Oh, heavy selling. Oh, up, less volume, less volume. Oh, heavier selling. Oh, heavier selling. Heavier selling. You see that? They're selling it. Be careful with it. Energy, that's kind of hanging in there, but it needs to take out these tops across here. Energy related. Again, related to the turmoil. Financials lagging. Don't like to see the financials lagging. Okay, that's a red flag. Industrials lagging, no power there. Technology's dropping also. Consumer staples, not real power there. Healthcare's dropping. Consumer discretionary, consumers pulling in their horns, folks. Look, they're not buying. They're not buying consumer stocks. Metals and mining dropping. Energy, or XOP. Folks, this is why we do this at Mission Winners. Systematize. I could ask you right now if we were conversing with each other, so what's the big theme? What do you see? And all of you would say, well, it seems like energy is one of the strongest groups. That is power for you. Good job. I'm not saying buy it now, but there's been power there. Maybe it'll continue. Retail, no real power in retail. Software hitting new lows for the whole move. Nothing to do with it. Stay away from software stocks. The MAXLIST, these are the big institutional stocks. So here's Apple, the first MAXLIST stock. There's years of research in this list, by the way, folks. I didn't just put this together. And this has been my go-to list, some of these stocks since the last century. All right, I'll just tell you. Apple, not a lot of power at this point in time, and it's below the falling 50-day and falling on increasing volume. Not a lot of leadership there. May form a higher low, but so far, they're still selling it. Not a lot to do with it. And you can see on the weekly too, dropping on heavier volume. Not a simple setup, so be cautious with it. Amazon started to lift off. Look at this, rallies. This is an important lesson for everybody. Everybody knows about the 50-day moving average line. Oh, look, it had support on the 50-day. Oh, look, it had support on the 50-day. Support on the 50-day. Support, support. Oh, look, it had support on the 50-day, and then finally it cracks through it. Runs up, runs right up to the 50-day and stops. Use that 50-day to help you. It works. Monitor it, okay? Rallies up to the 50-day, and it's backing off again. There's no real power here in Amazon at this point in time, all right? Continue onward. Bob is dead. I want to share this with you, mission winners. We don't have to dwell on each chart and do a deep analysis on it. It's below, look at the weekly, look at the daily. It's below the falling 50-day. There's nothing to do with it. Just leave it alone, okay? I'd say, well, maybe this is the bottom. I'd encourage you, don't play the maybe game, all right? Stack the deck in your favor. Not a lot of power there. I'd be careful with that. BIDU, same situation. They're like sister stocks, okay? Baba, BIDU, both of them telling you, stay away from me. That's power. It's really good to know what to potentially buy, and it's really good to know what to avoid. Opposite sides of the same coin, and both are very powerful for us. Here we go. Continue onwards. Google started to lift up, but they took it back, and it's just a function of the market. All right, there's just nothing happening here. Falling on increasing volume, it looked like it was going to go. They gave it back, and again, a function of the market. No power, falling on increasing volume, not a clean pattern at this point in time. Goldman Sachs, there's nothing there. It's below all the moving averages, falling, leave it alone. MasterCard dropping on heavy volume, nothing to do with it, done. Meta looked good. We bought Meta right here and ran it up, and you know what we did? This is a valuable lesson for everybody. We were selling into strength, and then it started to drop, and we sold more, sold the rest, and I'm so glad we did, because since then, it runs up and it drops, falling on increasing volume. At this point in time, there's nothing to do with it. Now, I will say this is one of the better looking charts, all right, out there. So something to watch going forward with Meta. Nothing to do with it now, but it's showed more strength than a lot of them. Microsoft runs up, forms a tail bar. This is a tail bar. Gaps up, runs up, and closes near its lows on a pick and volume. Be careful with that. And then it drops here on about the same volume. Supported the 50-day, but it's kind of loose and choppy. All right, be cautious with Microsoft. Netflix gapped up on news. Perhaps Netflix will form a little handle here, base for a couple of days, and if the market gets good, take off. Until that happens, you just gotta wait. Gotta wait and see what happens. I said this at the meetups for years. Just because the market's open for business doesn't mean you have to do business. That'll help you. NVDA, nothing. There's nothing good going on there. We just have to leave it alone. Look at that drop, by the way, on volume. And look at the weekly. It's lost its leadership for now. Tesla. What caused this drop? Earnings. What's the moral of the story? And I say this constantly. Always know the earnings dates. Always. Also, I'll take it a step further. Know the times. Some stocks report before the open. Wouldn't that be a rude awakening? You think, oh, that report's on Tuesday, we'll be fine. Tuesday morning, the stock's gapping down huge, and you're going, whoa, what happened? They reported before the open. So know that. It's a business and we run it like one. Most stocks, the vast majority of stocks report after the close, by the way. There you go. So nothing great there. Leave Tesla alone. Nothing to do with it. Continue onwards. Visa, it's just sloppy. There's nothing really going on with it. And we go back up to the top. So that was the max list. What's the big takeaway? At this point in time, the market's got a downward bias to it. It's sloppier. It's choppier. It's not as predictable. It's not getting negative or bearish. It's just reporting what is. Keeping an open mind, what does that do for us? It tells us, A, let's be careful here and avoid a lot of things going on. And B, keep watching because eventually things do turn. They always have and they always will.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.